So how are you doing today, Michael?
So, I was just playing with the kids. I was getting bullied by some tough guys on X, and they bitched out when I told them I'll give them 500% handicapped and trade against me live stream, and they got Velcro balls and they fell off.
But bro,
So it's always
everyone's a tough guy behind the keyboard warrior. It's something else when you actually come here and you make, again, not only do you perform on stage, you give people a voice, and if they want to come up here and take the speaker tag, come on up, talk your
it's
shit.
simple.
Right? Let's
It's
let's see
simple.
where'd you have whatever you had versus what you had, right? Like the way you framed it was very clear, it's beautiful. And this is someone, as you were coming up, someone, Alex, was asking almost trepidatiously. He's like, well, I kind of wanted to take a long. Was it okay if I took a long? And it's like, I hope you heard me. It's like, trade your model, right? Like, you're framing out what you're framing out and what you want to see. But if we're looking for small, short impulses within the market and we're trying to map ways in which we can engage with some form of LR, if we think that possibly could engage within the components of our model, and if it's within a macro, you'd suggest them take the trade, wouldn't you?
Yeah, I mean, if you look at what I was tweeting, I had a modest bullish bias, so I thought that we would see all-time highs today. But it just so happens that I wanted it to go a little bit deeper into a retracement, and I wanted to maybe capture something on the ride down pre-session, and I wanted to see the opening range give me that little fair value gap that I had shaded in white. I wanted that, like I wanted that as my fill, but it just ran up there and did what it did. So I felt because it took off and didn't go to any sell side at all, that they were going to get real close to all time highs and then drag them across the coals. So that was what I executed on today, and
And that's
you
like the
can say
profile,
they
right?
burned me on that last portion. Huh?
That's part of the
What's that?
profiles, like having students understanding profiles and how you're able to anticipate what is then a sequential move because you anticipate an up and then a down. So whether you engage with an up or the down, the move you were seeking and what you wanted to trade was a down move. You're saying that it's permissible to go up, but you specifically wanted to see a down move, which I find very, it was interesting because yesterday I came to the market at 7:30 and I wanted to find a long and all it did was short, and you were calling out the
Yeah.
short the whole time, and then you came onto the live stream and you wanted to see a short and all it did was long at that moment. Like, it's just
Yeah.
like when you're at the live stream at that moment, you can have a full on correct bias or whatever, but you have to be able to engage or pivot with what price is allowing you at the time, which is, in closure, what I'm saying, that's what your whole 2026 mentorship has been about, dispelling people from focusing so much on their bias and trading what price gives them.
That's about it. Yeah. Yeah. Whatever's in the chart at the time trumps anything else. Like it's event driven now. Everything is overreaction, very sudden, fast paced. 1 minute candles are like 100 handles. It's it's very challenging. What used to be I could put on dozens and dozens of trades in a single day and be long and short that all day long. Now it's like I have to be very careful because I can get into the trades and I have 20, 30 handles in my favor, but I'm looking for a little bit more out of it. And then it just simply either peters out or something goes the other direction. So you have to be a little bit more selective in what you're looking for in terms of a trade.
See,
And the more things you have going for you, it's better.
is that, would you think, more time distortion? It's, I mean, we're in this compression high consolidation. I mean, is that kind of
I
where
don't
we
think
would,
it's nah.
it's
I don't
more
think it's
fill
time
then,
distortion.
yeah?
It's more manual fuckery. It's just they're just in there doing all kinds of dumb shit, and it's gonna scare a lot of people. It's gonna hurt a lot of people, but it's not gonna stay like this. This is only a temporary thing.
Excellent. Michael, I'm going to get back to the classroom and see if we got any folks in here, unless you want to add anything else.
No, I'm looking at like the Dow. Dow's not agreeing with what Nasdaq is doing, and ES is just consolidating sideways, and MNQ has been allowed to make a slightly higher high. So I see the decoupling there. They've built a lot of sell side around 950 on MNQ, and I wouldn't trust staying net long on this, even though it's at all time highs. It's just there's not me. Not me, brother.
No, I agree. I mean, outside of these scalps, that's just really, I mean, being done for the day, being content with enough, and I mean, this late in the day, I mean, all of the, for me anyway, all of the like mental capital, I expended it early. So even looking at the chart now, it's like it can do whatever it wants, but like my concentration or my focus towards a real trade plan won't be until a lot more data comes in, right? Like, I mean, like you say, I mean, I'll probably wait for the whole gap to come in and us to open up before I get real interested if there's anything in the, I mean, I trade the Asian sessions. So, I mean, this is kind of what it is. Asian and London sessions have always been where a lot of my models that you've taught are around.
You look at the first hour trading, 9:30 a.m. to 10:30 Eastern time. That's pretty much the lion's portion of the run today. That made sense. It had technicals behind it. It was really it was rather clean. And then not long after 10:30, it just started going consolidation sideways. It had some lift in it, and it's consolidating again here. But majority of the trading has been done in that first hour of trading. So that first hour's dealing range. We've been talking about that this year. So, and this is an example of that's all you would need. You wouldn't need to have any more range beyond that. If you just engage only in that first 60 minutes, it's enough. Move to the sidelines and let them do whatever they want to do with the market after that.
And then we're really staying engaged and focused with our models as per what you teach. The
Yeah.
modelistic approach with the if then statements, not needing every move, not needing to call every single wiggle in the market. Like, I mean, after 1400, I mean, we started, yeah, 1330 printed. We're in 1400. We're in this PM session here, but I mean, we've really just exhaustively been expanding to the bull side. So I wouldn't want, as you're saying, I wouldn't want to engage in what could be a exhaustion within the day. So
Yeah. New longs in here, I would never participate in that. With the market we have right now, I would not. And I don't care if it goes up 1,000 handles from here. It's a trade I would never ever take. I would never take that.
I agree. I mean, I agree. There's zero interest in wanting to take it. It can do whatever it wants, and that's what it is. So, Michael, we have a few folks here. I wouldn't mind seeing maybe what the specimen has to say, or a few other folks. Do you can you
Yeah, yeah.
can you tap in with what Michael's saying? Do you got maybe a question or comment you can add to the specimen?
Yes, sir. Okay, so I know we're in the 22nd today, but I watched the last live stream as well on the 21st, and I took some notes on there. So I don't know if we want to stay salient to today's market action or
I
just
mean,
do an
I'm
open
really
conversation.
interested in the question. I would love for someone within the audience to really pick Michael's brain and really maybe extract some value from him. And it's up to us, the community, to ask quality questions to where he can engage with that. Thank you, Market Oracle raised his hand. I can rely on a
Okay.
few folks here knowing that we can get some type of thought-provoking question. I would really like to maximize and take advantage of the fact that we have Michael here. So pretty please, any question would be great.
I think, okay, so based on my notes, one of the real questions that kind of like sits on my brain is as he's doing his internal dialogue, and I know this is literally from his years of his experience in backtesting, but as he's watching these candles print and he's noting like premium wicks, discount wicks, fair value gaps, and wanting these like reaction, these like speed to move out of them and respect them and show the sensitivity. Um, I think a question that always sits in my brain is like, how, like, what is he really looking for the time spent and how and I guess the anticipation of how many candles is he willing to allow printing inside this fair value gap, how long is he wanting it to really take to leave that gap, because I'm looking on my charts as
Which
well
gap
and
are we talking about? What time frame are we talking about? Where are you referencing within what he lectured?
okay, so I watched his review today, and before obviously Phil came in and did his thing at the bottom of his move after he took his partials, and he was saying, you know what, I'm pretty much content near now, but I want this top wick to not print past the consequent encroachment. I always hear him say that, obviously, and I understand we want sensitivity off these key areas. But I'm in my head, I'm like, should I be back testing like how many candles it's taken to get to the wick
Yes,
and
yes,
how correct.
absolutely.
Okay. Okay, sounds good. Because because yeah, part of my brain is like some days are different. Sometimes I'm like this wick prince, and it's like, okay, so 1 minute, 2 minute, 3 minute, we're getting there now. We hit it, and then we react and we leave. And other days it takes it a little bit longer. So I'm just assuming, obviously you already answered the question, but I'm assuming that you've kept so much um research on the, I guess, the amount of candles that print to the key level, how long it takes, and then how long it takes to leave, and and if it ever
I
comes
promise. I
back.
promise you, Michael knows that within all of how he's trading. Absolutely, how we trade, what you're looking for. The longer you do this, those questions, those
Hmm.
become innate. Those
Yeah,
become
yeah, cool,
second
cool.
nature. So everything that Michael is teaching is for you to evolve into answering all of these questions real time while you're in a trade, even before a trade and or after a trade.
Yeah, okay.
Okay, quickly want to keep it moving. I want a question. I want a question for Michael. Market Oracle, do you have something? Market Oracle.
Yes, sir. How you doing?
I'm fantastic. Please go ahead.
So my question is, for a silver bullet trade, like 10 a.m. silver bullet, so do we wait for the fair value gap, first fair value gap, to be printed at 10:01, or can we use the 10 a.m. fair value gap for the silver bullet?
The first part, I got the last one, but what was the first thing? The first choice?
So suppose there are two fair value gaps that formed during the 10 o'clock hour. The first fair value gap, the imbalance formed at 10 a.m. candle. All right, sir. And the next one formed at 10:05. So what would be considered the first fair value gap for the silver bullet, the 10 a.m. candle or 10:05 candle? Or should we wait like for regular trading hours, we wait for 9:31 candle to be our first presented fair value gap in most times? Do we do the same for every hour, or that is for the 9:30 only because it is the market opening time?
You went from 9:30 to 10 o'clock. You're confusing me, buddy.
Yeah, I'm
Okay, let me
Did you
try it
get
rephrase.
one
that?
more
Hold
time.
on. Did you get that,
Let me
Michael? Hold
rephrase
on.
that question.
No, I thought I did, but then we
Yeah,
went
and
to a
then
different time.
you threw a
Just try it one
curveball
more
in
time.
there. Yes.
Yeah, just try it one more time.
For the first presented fair value gap for each hour, can we use the 10 a.m. candle or 11 a.m. candle for our imbalance? Do you get that?
Uh, Kid, what's he trying to tell me? I don't understand what he's saying.
I mean, I think he's asking like for are you like kind of referencing the inefficiencies within a macro as we're going into a new hour? Is that what you're
Yes, we
referencing?
are going into new hour. Yes,
So I mean there
while we are
can be
going into the
efficiencies between the 50 and the 10 as we're looking into the new hour towards mapping ideas, right? That would be like our last presented imbalance within the hour and then our first presented within the hour, right? We've talked about that
what
here
I'm
with
trying to
Michael specifically.
what I'm trying to ask is when we are mapping our first inefficiency for the hour, can we use the top of the hour candle, like exact 10 a.m. candle for our inefficiency first presented for that hour? Or
I
do we
think
wait
he's
till
asking
10:01?
for clarity on specifications on processes and procedures for the first presented outside of the 9:30 open. Is that correct? Oracle?
Yes, sir.
Okay,
Yes,
okay,
sir.
Michael, that's
Yes,
what we're
sir.
looking for. He's asking for further clarification for his own understanding on the first presented outside of the first hour of trading.
Well, then you got to know what the draw is first. So whatever that first 30 minutes left in its wake, whether it be relative equal high, relative equal low, whatever your convictions are in deference to what you think that draw is going to be, because it's going to be determined by whatever the market's doing. And we're just speaking hypothetically here. But let's assume for a moment that regular trading hours, there's some relative equal lows that were booked in the first 30 minutes, and opening range gap, consequent encroachment is below that. So there's already built in potential to trade lower. The very first fair value gap on the 1 minute chart after 10 o'clock, that when that forms, that could be your first presented fair value gap to get short, aiming for that consequent encroachment of regular trading hours open range gap, and also partial, if it affords such, the relative equal low. If there is no fair value gap that formed, okay, if there is no fair value gap that formed that's obvious after 10 o'clock, and there's no sell-side imbalance buy-side inefficiency, assuming all things being equal with the example I just gave, regular trading hours opening range gap, consequent encroachment being lower than a regular trading hours 1 minute relative equal low. So in other words, at 9:30 Eastern time, the regular trading hours price action forms relative equal lows that have not been traded to, and gap hasn't been explored. We haven't gone to the half of the gap yet. If there is no fair value gap forming, say they keep the ranges tight in such a way where it's still dropping a little bit, but they're not overlapping and creating that shared range before the top of the hour, right at 10 o'clock, go to the left, and the last up close fair value gap that's a buy side imbalance, sell side efficiency, expect that to perform as inversion fair value gap, and that would be carried through to as a first presented fair value gap. Otherwise, the very first fair value gap that forms as a SIBI in that instance, that's the one you would take.
So when you say first fair value gap after 10 o'clock, so do we include the imbalance that was created on the 10 o'clock candle?
That's the same question you just asked Market Oracle. So Michael,
No, what
he's
I'm
no, I
my
understand Market Oracle. I got you. So Michael, he's still asking for the process or procedure. He's still asking the same question.
while I understand what Michael is trying to say, but I want to clarify one thing. He said the first fair value gap after 10 o'clock. So if the fair value gap is exactly at the 10 o'clock, when the time says 10:00, do we take that or we wait for 10:01 like we do that in the regular trading hours 9:31 candle? Do the same rules apply as 10:01 candle can be the first fair value gap, but not 10 a.m. candle?
Okay,
Am I
okay, I
clear?
understand. It's the same thing when I teach the first presented fair value gap in the opening range. I don't like this to press you into using the 9:30 if it creates the fair value gap. And I tell you to look at 9:31. Are you asking, is that same rule apply for 10 o'clock for silver
Yes,
bullets?
yes. That's what he's asking.
Okay.
Yes.
I generally don't like to see it. It can form. It'll be a trade I miss. I'm not gonna utilize it on the top of the hour. I want to see something show its hand as a displacement towards a draw on liquidity where everything's in my favor and I'm not using the top of the hour candle. I'm not trying to discourage you from doing that. I'm just saying, me personally, I have not done that more times than you may be thinking I have. I choose not to do that. I want a subsequent candle after 10 o'clock. So 10:01 or thereafter, I'm looking for the very first one to form. If they're not forming, and then I can see that they're sharing, like every candle's like an immediate rebalance, no inefficiency there, I'm going to look at that last up close candle right before 10 o'clock's candle. And if it's an up close fair value gap, BISI, buy side imbalance, sell side efficiency, I will carry that through and use as an inversion fair value gap. Many times I'll just take that, even if it's there, and then I'll take the very next fair value gap that forms post 10:01, and I'll pyramid using that, and I'll just build a position up with that. I'm not sure if that helped you, but that's the best I got for what you're asking.
Yes, sir, it did very
Yes.
much because many of the times, like 3 a.m. candle, it most of the times it forms a fair value gap imbalance and at the 3 a.m. But it was not helping me with my analysis, and it was contradicting a lot of times these candles. So I had to ask that question. Well, my another question is, we have so many defensive PDRAs, and I have uh, uh, listened in many executions, and just like today, that price should not go above there, and all the time price follows your follows your request or advice. What should I say? Your direction. You say price should not go above this, and it doesn't. So my question to you is, why don't you trail the stop loss to these levels where you know that price is not allowed to go? You do not allow price to go there.
Well, because there's a lot of manual intervention. If you look at my other older, in like take 18 months prior to 18 months ago, all of my executions, you could see that I was trailing stop losses lower, 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 because I felt comfortable that there wouldn't be these wild 100-point candlesticks come out of nowhere and just do a wide sweeping rake across everything that would have been trailed. Because I have seen these things occurring in the last 18 months, and it's gotten worse now. Like it's gross now. You can see how it's just every day you're going to have one of these candles come out somewhere. So because of that, even though I have logic that I think is superior to everything else, the conditions dictate that. So I have wonderful tools. Like I said before in previous sessions, I have models that I've used over decades. And right now, some of those models aren't firing because of the volatility. They're a little bit lower volatility model. And because of the extreme volatility we have and these big spiking events, I can't use that model. I have to use something else. So it's a matter of adapting to what the market's providing us in. Either you choose to engage the volatility and trade with less size or a more forgiving model and keep your stop loss outside the reach for the majority of the trade, or don't trade at all. I'm not gonna trail my stop loss just to protect the position from going against me. When if I'm taking partials, I can afford to keep the stop loss farther away. That's the whole benefit of keeping the idea of taking partials. Either you're going to move your stop loss and not take partials, or you're going to take partials and leave your stop closer to where you entered.
Great question, Market Oracle. Thank you very much.
That is very. Thank you, sir. Thank you for the opportunity. That is very well explained. And these were all my questions for today. And now we move on to someone else.
Thank you, Market
Thank you.
Oracle. Appreciate you. So, I mean, that was a great answer. Pit Munch, you're up next. Keep us on topic, pretty please. You got a question? I'm going to just stop real quick. The fact that no one has said a word about the first utilization, the fact that we aren't talking about first utilization in this room, you guys got me completely fucked up. No one's come up here talking about first utilization. Got me completely sideways. Who's up here anyway? Bringing up these freaking people that don't know anything about what's going on? Can we pretty please stay on topic? Don't make me go sideways up in her. Pit Munch, you're up next.
No, I'm scared.
You don't need to be scared. We're just trying to keep it on topic.
Yeah, I wanted to go back real quickly to specimens question, but I'm scared now.
No, that's okay. You can jump and answer any question. Don't be scared. I'm just, deep breaths. We're trying to stay on topic here. And
Yeah.
I got to make sure that the bus stays on the road, apparently, because y'all are just talking about I don't even know what. Come on now.
Well, I talked about first utilization yesterday, so yeah. I wanted to go back to specimens question for a quick bit. Michael did 3 lectures in 2024. One about high resistance liquidity run, low resistance liquidity run. Then one was tape reading high resistance liquidity run, and one was identifying high resistance liquidity run. And what I wanted to get at is that in one of those, I'm not on my laptop right now, so I can't say which one, but in one of those, I remember that he said in the high resistance liquidity market conditions, he doesn't want to see the candle stay inside of a PDA for more than 3 minutes. And I remember specifically the 3 minutes. And for low resistance liquidity run, yeah, then ideally you just want to see institutional order flow entry drill, like and gone. My question is, well, I will post those lectures in the comments. But my question is, if Michael, do you still would you still say that is a good time window because this was 2 years ago, or would you say it changed because of the war and everything that got added now, and it's not just like normal high resistance market conditions?
Obviously, I'm a little bit more forgiving Um, and you can see that in today's execution, and you can also see it in the live tape reading the other day I did when there was a lot of candles staying in the lower half. So as long as that logic is still proving itself valid, where I'm usually looking for, two or three candles inside of an inefficiency, and then it should get on with its direction. But if the candles are still booking inside of it and they're staying in the lower half and they're showing premium sensitivity, I'll stay with the idea a little bit longer because it hasn't proven itself to be shunning that logic of the upper half of that PDA rate or that gap is not being utilized for a body to be laid in it. So as long as those things are there, obviously I'm not going to do it with 15 1-minute candles, obviously, but
No.
a handful of them, 5, I think is pushing it. And beyond that, I think it warrants a decision whether you cut bait and run, or if you're in a position or looking to take a position, maybe not do so. So I think 5 right now is about fair. Anything more than that is excessive, and the probabilities shift exponentially against you. Anything beyond that.
Okay, good. Thank you.
Excellent. Thank you, Pit Munch. We're smiling, everybody. We're having fun. No one's scared.
Everything is good.
Everything,
Pretty much. Thank you.
No, I'm not
Thank,
scared anymore.
thank
everyone
you
is
for answering that.
laughing. Everyone is smiling.
Yeah, thank you for answering that, Pit Munch. I'm also a 2024 student. That's the first lecture that I started with, so I do
Oh,
have those in
nice.
my notes as well. I do have those in my notes as well. It was just from 2024 up to now. I've been tracking that as well for
Yeah,
myself. I remember him saying about the time. I remember him saying about the bodies. Like
yeah,
anytime I'm looking at the inefficiency, that song that goes, "Let the bodies hit the floor, let the bodies hit the floor." Like that's what I'm looking at, these bodies laying down. But as I over these last 2 years, I'm like looking at these bodies, counting them, and I'm like, okay, so sometimes it's like a certain number, other times it's not, other times way more manipulation. So I'm like, this is kind of like a dynamic thing. But anyways, I'll just leave it
yeah.
at
But
that. But yes, thank you.
your question reminded me of me hearing him say 3 minutes specifically. So
100%.
that's why I wanted to know, because he said 3 minutes, but that was 2 years ago, and we didn't have the World War, and we didn't have Phil the whole day pressing the button. So you reminded me of that, and then I wanted to verify with him if he would still think it's a 3-minute window. But now he specified it not in minutes, but more in amount of candles.
Correct. Okay.
Beautiful. We love it. Does someone have a question in regards to the first utilization? Pretty please put your hand up.
Are you talking about the first presented Fair Valley Gap today?
I'm talking about the lecture yesterday. I'm talking about an entire sequential schematic that was gone over that seems to be glazed upon by the entire community. They appear to be, I don't know, dumbfounded by what has been released. I don't feel like anyone is taking what has been released serious if they've back tested it, if they've applied it to their chart. And I believe Michael has challenged you within lecture to look at specific things, and he's here to see within the community if anyone actually is listening to his lecture. And I'm pretty sure I'm the host, but I'm not the only motherfucker here that can hear what he says. So I'm just looking to see if anyone else can hear what I hear. And there's a lot that came out yesterday. It sounds like I don't know, do we have folks that just aren't caught up? Is that it? Like I have some folks that are
Okay,
like,
so
oh yeah,
Kit,
go ahead.
I started this conversation with asking you like where you wanted to start
No,
because
no, no,
I
no. It's all
mentioned
good. Here's where we want to go
yeah,
right now. Here's where we want to go right
no,
now. And
I get that.
I've got charters that are in my DMs and in my phone, so I feel fortunate and blessed to know that we're gonna be. I've got folks backing me up to ensure that this conversation is of utility to the community. So thank you, Pippi Banks. Michael, if you don't mind taking a look at the chart, I posted something that you had previously posted. It is in regards to I'm going to just refer to these PD arrays as what they are. And what I would love this conversation, or if we can add value to the community of reiterating or readdressing some of the specifications, the what you're looking for. Someone was asking specifically about the PD array Wrath, but I posted Modus, Reaper, Gallo, Gauntlet, Wrath, Venom, and then you had Zircon, which was from your post in January, just right as we were starting 2 months ago. So I was hoping we could utilize this time as value to the community, where you can take the mic and pretty please, however you would like to elaborate on any of those PD arrays for the folks within the community, so they can sharpen their pencils and take some notes.
The Wraith, is that what you were going to say? I thought you said Wrath. I
Yeah,
don't have anything
yeah.
Wrath.
I'm sorry, I pronounce it
I'm like,
incorrectly.
wait a minute.
And hey,
What
but
time am I on?
go ahead. I'm sorry, Wraith.
Yeah, it's Wraith. There is no specific location where they're going to fit, like when I did the PD array matrix in
Yes,
month 4,
right.
where I had like, this is where they're normally stacked inside there. These are unique. Okay, and Zircon's really a model. It's not really technically a PD, right? It's a model blending specific logic. But the Modus and Reaper, they are very specific when it comes to like breakers. The structure that you see form around a market PD array, creating a breaker, whether it be bullish or bearish, they're germane to that. Venom and Wraith, Gauntlet, and Gallo, they're kind of like standalone. They can really appear anywhere in that matrix. So there's PD arrays that are very specific to a one side of the matrix of what time frame you're trading, whatever that is. If it's the first hour trading.
In the side, you mean premium or discount, and where or how it's in the
Yes.
extreme of one of those sides or the other, where it lands, correct? Okay.
Right. So whereas in month 4, I give very, very clear distinctions between the placement of where they would be at. Those are the only PD arrays that have that characteristic where you can see them. And that's why I taught it that way. So you can just use that. It's user friendly. It doesn't shuffle around. It doesn't move around. They can be used as a static mindset about this is where they're likely to form. So that way it's predictive. These here, you have to submit to them building up in the criteria that lends to them materializing in price action. They can exist anywhere in the PD array matrix. It could be anywhere. Like, it's not like it always forms between a propulsion block and a breaker. No, it's not like that. There's no specific anchoring to it in like the things I've done with the month 4 PD array matrix.
So would
stacked.
would it be more like a bridging, more kind of a sequential kind of thing? Like we clearly have the matrix and we understand what a mitigation block is, close to 50%. We understand the rejection block at the extreme of structure on either side. So you're saying these arrays, they're transitional, they're a bridge, they're not, they can be anywhere, you're saying, right?
Yeah, I'm not certain that a bridge is the right term.
Yeah,
but
I
get what
don't
you're
know.
saying.
I'm trying to pick from your brain what you're saying. That's all, mate. So
They could be anywhere in there in the price run. In other words, obviously, if you're looking for lower prices, these can form anywhere in there, and it doesn't have any precedence over or above any previous PD arrays like I taught in month 4. They can exist in any one of those. And there's no hierarchy. Let's put it that way. There's no hierarchy.
Okay. That's good. I understand that.
So they're kind of like a standalone. They're complete model. They're complete methodology by themselves, and because of that, they're unique and they're segregated from the traditional ones that I taught in month 4's paid mentorship.
So Wraith, which was the original question, what if then logic, or what do you mind describing a little further what Wraith was or is, as that was the question brought up by the community member?
I'm not going to teach it in the in a space
Okay,
like
well,
this. Number one,
okay,
I wouldn't be able to
okay,
do it.
okay. This is okay. Good notes, folks. Sharpen your pencil. I wasn't sure this would be introducing an array that hasn't been introduced. So I didn't realize that. Okay, so asking a little too much, Mister.
I appreciate your enthusiasm.
That's good. I love the enthusiasm, and that's the charter folks really trying to pull it out. That's good. I like having our folks in the background doing that while we're entertaining some of the maybe less experienced questions. So keeping it going, keeping it flowing.
May I just ask a
Oh
small
yes,
question?
Alex. Yes, sir. Go ahead, mate.
I hope you're doing well, brother. Just a curious question. What's a mistake you still actively guard against today?
Are you
Is that for you, kid, or is that for
no,
general?
I
No,
presume he's
for
asking you, mate. He's asking you clearly.
Michael.
No, I didn't. I thought he was. Okay, he said, "How you doing?" and you responded. It sounded like the conversation was directly you. If you're asking me specifically, what am I guarding, or what mistakes I have made in the past, I tried not to do still at present? Is that what you're saying?
Yeah,
Uh, well, the one I'm trying to do now is not reach for everything I have in my awareness, and what I'm usually able to do in less difficult market conditions. There's a lot of things that jump in my head when I'm watching price. Sometimes I'm looking at things and I can see two or three models that are saying this is what's about to set up, and I'm watching these things and the criteria around those models or those profiles, those ideas that are going to lend well for a specific trade. I'm many times, well, when I'm doing tape reading, perfect example. I'm looking at something that I want to articulate and speak on, and I'll start that process with you in the live stream, and I'll say, okay, now watch this right here, and then my mind saying, look at this, look at this, look over here, and look what it's doing over here, and look at this, it's getting ready to do that, and I'm like, stop focusing on that because I want you to focus on what I'm starting to talk about right now, and they're all many times agreeing with the same premise. So there's different ways to skin a cat with the stuff I've taught, but fighting off the desire to do all the things that I see. And they sometimes jump in the forefront of my mind, and I have to remind myself what I'm looking for, what I'm trading on. And the logic around that model has to be put aside so I can focus on the one I'm trading because I'm teaching it in public eye. So that I want everything to make sense to you as a student. So that's the biggest thing I'm wrestling with right now, is because I have a lot of things that will be taught and other things that I will never share. And they're always jumping in my head. And sometimes I have to be careful because in the live stream, I'm not allowing myself to think quietly. Everything that's coming through my mind, I'm constantly talking. I'm constantly talking. So that way you know that I'm not holding some other alternative view about something. I'm constantly speaking what's on my mind. So there's no other way about knowing what it is I'm thinking. The internal dialogue is out loud. So, but it helps me also stay on track because if I stay quiet and I'm watching price action, 20 to 30 different models are speaking to me at the same time. And that might be a problem if I allow that to jump in the forefront of my mind. And then it will force me to abandon the lecture I'm teaching and I'll go off on a tangent. And what I'm going to start talking about, we'll still see it happen in the price action, but I didn't communicate it well enough for the first lecture or the premise while we started it. So I'm constantly having to fight to focus on one thing and one thing only for the purpose of teaching you. So that's one of the things I'm constantly fighting off, and wanting to do more because I'm used to being able to do long and short all day long, up and down. I'm having to remind myself that there's opposition right now. It's formidable opposition, and I can't defend myself from it when it enters, and nobody really can. So I think that's an adequate response. I gave you two of them.
That's the most intimate and revealing response you could possibly provide. I can tell you how grateful and appreciative I am for that because being a universal trader, which is what you teach folks to become and the longer that they've been within your elk, what could come across as confusing to someone who's traded with you for a long time, seeing you pick a concept, stick with that concept, teach and trade that concept, and not refer back to that student's model. I feel like some of the community, they feel a certain way. And I think how you just responded, Michael, is just such a beautifully intimate response coming from a mentor trying to teach a community. And if the community can really tap into what the mentor just said, some of his intimate challenges are, I think you're going to really, really tap into all the things this man has to say, period, because you can't be more authentic than what he just said. Wow. I love it.
Thank you very much. That was really appreciate you saying that. And just one more small question: what daily habit had the biggest impact on your consistency?
Going through a top-down check of the things I had listed the last time I looked at the chart and my expectation and the things I would anticipate. The checklist of did I see this buy side remain? Did I see this sell side remain? Did they take that sell side? And where would I be left in the order of if then? If it does this, then what am I doing? If it did this, what am I looking for as the next point of interest that puts me in a position where I'm going to make a decision whether I'm going to take a trade or not? Um, there may be things that I annotated and said, if it does this, I'm not going to be interested. I won't participate. And it's just a matter of knowing what I'm looking for, what price should and should not do because of the experience that you gain by doing all this stuff, and adhering to that. Because what I would usually do is, when I was a younger guy, I felt that I had to delete all my chart annotations and abandon everything and treat it like it's a brand new day. And I actually taught too early, too early in my development. I was teaching too soon, and I was telling my students then, take everything off the chart and do a total top-down analysis every day. And what I learned by doing that was I would get tripped up by whatever new thing showed up in the chart versus I did a top-down analysis on the weekend. I had the days calendar in advance, what I'm looking for, what volatilities may come in, and then I'm reflecting on the previous day's delivery. What was done? What wasn't done? What's been left? What did they do that was unexpected by me? And how does that find its place in my analysis or my participation? Will I take trades now because it's done something I didn't expect to see, or that wasn't expected, but it really hasn't changed anything on the grand scheme of things? What I learned was that if the markets are algorithmic and if the price is really following a script, then it makes perfect sense to hold on to the previous day's expectations and analysis and key levels, and then carry them over and transpose those into the new trading day, and then watch for that new day's price action to fall in line with what is still existing in price action. And that was the biggest thing for me that took me from once in a while I'd get it right, but then I'd go into a tailspin because I'm doing a whole total new top-down analysis. But truth be told, I was using in my infancy and inexperience something that was unexpected that I saw on the chart. There was a big run up, not to the degree we see today, but something that I didn't expect, and it happened. And I'm like, okay, well maybe this is the beginning of a down move, which at the time I was a perpetual bull. I was only letting go long on everything I traded. But if I saw something where it broke down a little bit further than I would expect, that would completely change and discombobulate everything. It would make me second guess everything, and either I wouldn't take a trade or I would regret not taking the trade and sticking to my previous day's analysis in levels. So it's a matter of staying organized and sticking to what works.
Thank
Great
you.
question, Alex. Great question. Viking, do you got a question for us, please?
Hello.
And hi to ICT and UKIT and everybody else. I have a question because I trade on US Tech on CFDs instead of
Cool.
the Nasdaq.
Do you want to follow protocol real quick? You want to show us what protocol
I,
is? I
of
know you've been
course,
here before.
yeah. I'm working trader and I trade the Silver Bullet and Model 22 since 22, and I've been studying ICT's material since 2020 maybe. And I'm from Sweden. And if it's something I've forgot
Oh,
to
the
know,
Viking
so
name. I like that. No, that's perfect, brother. Thank you very much. I
great.
appreciate it. Just it's more for everyone else and
Yeah,
then
of
as
course.
well. Thank you so much.
Thank you. And my question is, I trade the CFDs on instead of Nasdaq. And my question is, if I have like a wick which I put the quadrants on or the eights on, sometimes that wick isn't the same level as the Nasdaq's. So it could be an open range gap quadrants on that's nearby the price on that assets. So my question is, should I go with the quadrants and analysis on Nasdaq and then trade that, but on the CFD, or could I use the levels on my US Tech? Is it the same? I don't know if I make myself understand.
No,
It's
that's
not.
it. I think that's a good question.
It's never going to agree. And I think you've noticed that by now. The CFD market, if let's just say it like this, because this is probably really what you're getting at. If I were forced to trade only the CFD market and I had no access to the futures market, how would ICT, how would Michael choose to use the information I'm showcasing in the futures market when I'm tape reading and talking about those things? How would I use that to segue into actionable points of entry, stop placement, decision making, all that stuff? Is that what you're basically asking?
Yes. Yes,
Okay.
it is.
So what I would do is I would put more credence on the levels that's seen in the Nasdaq futures market because that's the real information. The CFD
Mm,
is it's a composite of what's being shown in the futures market, but it's being twisted and contorted and whatnot. So having those same expectations to trade to an octant level or a quadrant level that's in the futures market price and expecting it to yield to you in the CFD when it's not anchored to the same data points is
mm,
it's a fallacy to do that. So what I would do is I would look at the futures market, and when it trades to the level on the futures market that I'm teaching, I would then at the moment it touches those levels in the futures market, I would just simply execute at market what I was expecting to see in the delivery on the CFD. So I would just trade the direction, and I wouldn't have so much emphasis placed on the precision entry aspects to it, because if you're trading with the proper leverage, you don't have to be perfect. You don't have to be precise. If you're trading
mm,
at the highest high of the fair value gap in deference to what might be a consequent encroachment or the upper quadrant in the futures market, what difference does it make if you know it's likely not to go down, you know, 50 handles and you're using a 50 handle stop? But it's not so much that you're splitting hairs about it. And that's the really repeating question I get a lot for folks that are outside the states. Their concern is can you show us with the CFD market? I have to be real careful with that because I'm I'm influencing people. Two, if I show it on my chart, naturally, you know, the assumption is I took the trade in something. So show us your broker, and it's illegal for United States citizens to trade with a CFD market. So I'm a little leery doing that. So I have to make sure I build this whole presentation so that way I can go side by side and show here's the futures market for NASDAQ and here's the US 100 CFD. You
mm.
just pay attention to what you see in the CFD market as I talk about the NASDAQ. And what I just said here, and you guys that do YouTube clips and stuff, you're welcome to use that there and put it out there. So that way I'm not spreading it. But that's what you should do. Time it with the futures market, have a very forgiving stop loss in the CFD market, and just simply yield yourself to what the market's going to do in the futures market. And expect that the CFD will be pulled in that direction, and just be a little bit more forgiving with your targets too. So you're not trying to get the end of the bone. You're not trying to get every little piece. You're getting a big portion of the meat. It's in the middle.
Perfect. Thank you. That's really helpful. So I've been doing this quite wrong, I think. So this is what I will do from now. So thank you very much for that.
You're very welcome. It's a good question. It comes up a lot, so it's not something that's unique to you. A lot of other people that are trading outside the state suffer with the same conundrum.
Yeah.
And you'd really have to follow in detail over the last few years where, I mean, Michael has traded with the CFDs alongside with the futures. There are lectures. It's difficult to
Paper traded. Make sure you.
Well, yeah,
make
yeah,
sure
yeah.
that-
Paper trading, absolutely,
Yeah.
yes, sir. Absolutely, you're paper trading. The teaching, yes, sir. The educational content is done. Paper trading, the demonstration of what a chart would look like in the CFD market, having the global audience, and it was a few years ago. I'm going to say almost 24 months. I can peel up the exact date. I'm not in front of a computer, but there were very specific lectures, and it's a great question. And I think that answer is probably the best you're ever going to get. Stay focused on the actual futures market and utilize the ICT concepts with the precision on the futures market that you have, but then realize that you're not going to get that on the CFD. And you're going to have spread and you're going to have the secondary broker. So ensure that you're positioned and leveraged correctly if and when you do decide to engage with the market in that regard. So,
If I could ask, when you trade the CFD for NASDAQ, when you're are you going through TradingView when you're charting?
Yeah, I do. I go with TradingView. Yes.
Okay. When you pull up US 100, what feed or what price feed or brokerage are you using for the data? Capital?
US Tech 100 index. Let's see what it's by my broker, so it's IC Markets I trade with. So yeah.
IC Markets? Okay.
Yeah.
Obviously I can't see that feed because I'm a U.S. citizen. I can't pull that. But in the past, what I've done is I've pulled up Capital Market or Capital.com, and I have no affiliation with these people. I'm not repping it, and like I get literally, I had 17 requests in the last 4 days for brokerage firms, and you all know them by their name. They're all trying to get a partnership with me, and I don't do those types of things. So when I pull up the futures, I'm sorry, the Forex market, I use Forex.com. And there's goobers out there that are trying to open up accounts right now. I'm getting emails sent to InnerCircleTrader at gmail.com saying your account's been approved for Forex.com. I don't ever use my InnerCircleTrader Gmail account for opening up brokerage firms. But because I mentioned Forex.com, when I pull up the Forex pairs, the assumption is I'm repping them as a brokerage. I don't have any affiliation with any brokerage firm. But if I pull up US 100 and because you mentioned it here, and I know someone or more than one, I'm sure, listening to this, they want to see what I just mentioned. They want to see an example. What did you just say, and how would that look in price action comparably? With the NASDAQ futures contract to the left or the right, and then the 100 or US 100 chart to the opposite side of the screen. And what would that look like, mark to market, candlestick by candlestick? Maybe I'll do that as part of tonight's review. I'll put that out there. But I don't have any affiliation with any brokerage firm. And I have to make sure I say that because I'm not an introducing broker. If I was an introducing broker, it's illegal for me not to disclose that. And because I have no affiliation, no partnerships at all, nothing, I have to make sure I go exhaustively over this stuff every time it comes up. But I'll do this as a favor for you by you asking it. And for the folks that do it, I will do a comparison today with the price delivery in NASDAQ futures contract versus the US 100. And that way, hopefully, it'll help communicate what we discussed here.
Perfect. That will be very interesting to see. Thank you.
You're very welcome. Hey, kid, I got 15 minutes and then I'm going to escape.
yes, sir. Sounds good. Brima, you're up next.
All right. Hey, hi, everyone.
Protocol.
What's up?
Protocol and a question, pretty please. Stay succinct.
All right. Okay, so from Kenya, the model I use is the 2024 model, waiting for pre-session highs to be swept and then just looking at the opposite liquidity pool. But my question is in regards to there's this previous lecture Michael did. I think it's this week or last week. I'm not so sure which one.
Okay, good.
But
I
he
like
was
it. I like it.
But he was stacking PD arrays, like one fair value gap and another one on top of it. And then he mentions that while he's studying price, he's trying to see which one will give in before the other one. So I'm looking at the charts right now, and the 1309, 109 p.m. BC is the BC just before the highs at around 1127 were taken out. And then also the 1320 BC is just the BC before the highs at.
So you're referencing
1310.
NASDAQ right now. You already posted a picture in your chart while you in the comments while you were waiting patiently.
Haven't posted the picture of the chart.
But it's a technical question, right?
Yes.
So you're wasting my time and everyone else's. Pretty please. There's a process and a procedure to what we do. If you do not follow the processes or procedure, you're demonstrating your inability or incapacity to even trade. So pretty please, in this room full of traders, there are processes and procedures. All right. If you have a technical question, your job while you wait is to post the chart. Okay. Brima, thank you very much. Continuing the
All right, could you allow
conversation.
me to do that?
Well, you're going to do
And
that.
then
You're going to do that. And we'll
come
come back to you on another day when time is not of the essence, and we will happily address this. Brima, I see you in here all the time, but next time you're going to be prepared. Yes, sir?
Okay.
Thank you. Yeah, chuckle at me. You won't come up again, son.
Said a different way, it's going to be very difficult for me to answer your question if it's technical, because I'm going to struggle with trying to figure. My mind goes to what are they asking? Why would they ask? The teacher needs to try to predict where you're going,
And there are
because
rules
sometimes
to
it's
do
too hard.
this. And we got to
Yeah,
keep the rules so we can value everyone's time. So I apologize
All
if
right.
I'm a little
Okay.
terse, a little harsh, Brima, but you're in my DMs. I've had conversations with you. You're not brand new. You are brand new to the conversation. You're not brand new to the process or the procedure. You're choosing not to follow it, and you're wasting everyone's time.
No. It's just because I heard Michael saying he's looking at the chat, so I thought maybe he'd be looking at it. Let me fix myself up. I'll come back another day.
Okay, thank you, sir. If you can get it posted quick enough, I'll come back to you quick enough, sir. All right. Thank you.
All right.
All right. I
yes.
appreciate it.
Thanks.
Danny,
You're
come up.
you're helping me if you get a chart. That's what I'm
Yes,
saying.
and I'm trying to help everyone here. So with love, we're trying not to waste anyone's time. We're trying to maximize the efficiency of having Michael here, and we're trying to be the best we can for the community. So it takes a community to build the community, and we have rules, we have processes, we have procedures. You need to understand one day you will be profitable. One day you will understand these are what you do to become profitable. You follow process and procedure. Danny, you're up next.
Good afternoon, everybody. Daniel, 38, trading ICT concepts for 2 years now in the market, and trade time frame correlation strategy, several other things.
Ooh, I like that. I like the phrase there. Time frame correlation strategy. That's deep.
Mike, the question I have is in regards to study, right? Because one of the things I find, and it hasn't just been in trading, but it's actually across multiple disciplines. Um, I have a difficult time sometimes coming up with questions, right? When I have opportunities like this to sit with, my teachers and mentors, it's like when I'm going through the lessons, when I'm studying, things that come up for me, and then I'll go look for them. And so then it's like when I'm in the forum and I don't necessarily have a question, part of me feels like I know what I know, but because I don't know what I don't know, I don't know exactly what to ask. So my question is, as a student, is there another level of study, or I guess how could I be approaching my study so that I'm able to kind of see those those blind spots where it's just like, okay, I need to go seek help for this.
You find that through your journaling and being brutally honest, but so caring and loving to yourself that you're not going to make yourself feel uncomfortable exposing your frailties. And by
Hmm.
having the openness, knowing that no one's going to see your study journal, not your significant other, not your children, unless you leave it to them when you go away, and all these intricate moments of intimacy where you're revealing the struggles that you're going through while learning this, the victories that you experience when you see things panning out in your favor and the things working, all those moments, they will provide that tapestry that you're going to be looking for further understanding. I'll give you an example. You go through the day and you've outlined certain things. You expected to trade down into the opening range gap, then you expected to trade higher, and it's going to go to a 15-minute relative equal high, and it's in the span of 150 handles, and you were able to watch it, tape read it, and observe it for the majority of the run, and now you feel good about it. So naturally, what do you want to do? You want to go to the study journal, put your chart in there, say, this is what I watched, this is what happened, and I feel exhilarated. I feel encouraged by this. And you want to tap into that stuff. You want to say that this is wonderful, but then go through that price run and look for things that would have otherwise tripped you up or scared you with less experience, and then annotate that as, this is progress that I didn't see it while I was watching it. I didn't notice it when the price action was running. But in my infancy, when I was first learning this thing right here, where it retraced a little bit further or just went outside that PD area a little bit, that would have scared me or caused me to second guess myself. And what other things can I look for in my other examples in the future that's going to help me feel rewarded for sticking to this process and these ideas? So it's a matter of balancing your emotional commitment to doing this, but also guarding that as well. You don't want to beat yourself up, but you look for things to encourage yourself along the way. And when you do that and you find that you're being honest with yourself, you're not writing down saying, I was foolish and I didn't see this coming and I wish I would have did better here. You don't put those things in your journal. And when you start having that conversation with yourself in the journal, recording these moments, encapsulating them, your subconscious relaxes, and all of a sudden you'll start seeing, well, I'm not embarrassed to ask these questions of myself or challenge myself tomorrow beyond what I'm normally doing, and then testing theories that I thought were a little bit too complex, but then I'm now comfortable doing it because I'm not demanding the outcome be favorable for myself. And then whatever the outcome is, it gives me something to study and measure it. And then how does that measurement apply to you on a personal basis? Do you take offense to you not being able to do it correctly, using it the first few times? Or do you feel like you're overconfident because it worked in your favor the first few times, and so it's easy? And then therefore, let me jump to something else because this is too easy to master. So all these things are internal reflections that you can use that will also, because of you doing that, will open your expectations to new learning, and questions will start flooding in, and you won't look at them as, well, that's a little intimidating, that's a topic I'll look at a different time. I'll take the slow balls and leave the fast balls for a different time.
Awesome. I appreciate that, man. Thank you so much.
You're very welcome. That's a good question too.
Thank you.
Great question. Brima, you're back. Did you get it posted, buddy? I'm checking. I didn't quite see. I'm hoping.
I posted it and also tagged you and ICT.
Okay. No, that's cool, buddy. I'm looking in the purple thing here. I'm looking for it. So hopefully Michael can look
I
for
just
it.
added a
Can you
comment.
did you post it in the
comment.
comments?
I don't see it.
Yes.
Yeah, I
Just
don't see it either. If you could post it again,
just in the
mate.
comments. Okay.
Pretty please. We might have tech difficulties. It's okay. But we need it. I just refreshed. I can see mine. I still don't see yours, buddy. Brima, with love, buddy. I don't see it. And instead of wasting time, we're just going to come back to you, okay? We'll come back another day. Me and you will go over this and we'll get your question answered. You'll be first one up on next Trader Roundup. All right, bro?
Unless Kit doesn't want to do it tomorrow,
Well,
I will
yeah,
be here.
yeah, bro.
I'll
We're
just let you
definitely.
know.
I'm following you. I mean, there's you never have to follow that. Say that statement unless Kit doesn't want to. I will be here. I have full intentions always.
Yeah, so just
Yeah, I
you can
might
come
get
back.
tripped
All right.
up. I might get tripped up on timing, not intentionally, but yeah, we'll be here. We'll be here.
Sorry, I just posted it again.
Okay,
I
well, look one
realized
more
I
time,
posted it
buddy.
again.
One more time. With
Yes, I just
love, I still
posted
don't
it
see
right
them.
now.
Wait, hold up.
23 seconds
Hold up.
ago.
Recent. I got to go to recent.
Yeah, 23 seconds ago. I think it's
Yeah, dude. I still don't see it, bro.
I don't see it either, bro.
Yeah,
just
dude. All right. Anyway, we're moving on. We're moving on. One
I
final
promise
question.
you,
Yeah,
have it
Brian, but we
ready
got you.
tomorrow, and then we'll look for you as the first one to get to. Okay, is that fair?
Yeah. Yeah.
all right. No worries, guys. Thanks.
Hopefully we're going to get this figured out to where when I send the proper thing, hopefully Michael takes the co-host tag, but the speaker gets there and somehow it's an issue, whatever, but hopefully we'll get that figured out. But regardless, the last question of the day, we'll bring it to Rick T in the weekly top 40.
Hello, Kit. Good afternoon.
How you doing, buddy?
It's good evening. Yeah, good. Good evening here I'm from Europe.
Yes,
So
quick
it's
protocol,
night.
quickly for Michael, reintroduce, and then quick question. We got a few
Yes.
minutes, last few, be succinct.
Yes, I'm a Gen X. I'm 52-year-old, so I'm kind of your age, guys. And I've been an IT professional for 3 decades, for 30 years. So, and then I came to trading and studying almost straight through ICT. There was many months where I was looking to retail prior to ICT, and then I found out ICT, and that was it. I've been
Good.
doing,
Pseudo purist here and computer
yes.
programmer. Quick question, sir. Pretty please.
Yes. So I had a question for ICT, but if I could quickly answer about the guy that I think was from Finland and so on.
I'd rather just you ask the question. We're short on time here, buddy.
It's okay.
All right.
When they come up, let them have the question. It's okay. I'll stay with it.
Okay, yeah, no, that's cool. That's cool.
It would be unfair.
No,
for
I
me
just
to
wanted to.
run
That
away,
was like.
let them have their
Yeah,
question.
it was like super short because the guy was training, or he said he was training the CFTD and those kind of instruments. But if you're
Feel free,
from
buddy. Feel free.
no,
Jump in.
no, not me. The guy before. What I'm saying is that if you're from Europe or like, unless you're from some, like country that is under sanction or war, but most of you guys can trade directly the U.S. future, wherever he's from a discount broker or regulated broker like IBK. I don't want to make names for advertising, but I use several brokers, and you can. You can regularly trade the U.S. future. There's absolutely no problem about that. You just have to, go online, go on Google, just find the information. But the restricted countries are really very, very few. Say that the question I had for ICT, I've been studying your stuff from past like 6,000 hours so far. Yeah, and from when I go from a start from core content, which I went through like several times, and you mentioned over the lecture, over the podcast, the X spaces or the Twitter space before, back in those years, like 10 years ago from 2016, you were firmly, you decided that, okay, no, I'm not going to teach this or that. This is the limit where I'm going to teach. And that was the private mentorship years. And then through 22, 23, 4, 5, 6, you decide to release more stuff. You decide to give us more gems, gift, or insight in the rabbit hole of your teaching. It's my opinion because it's my kind of career and work. I'm into engineering and reverse engineering. Knock to those that know what I'm talking about. And what changed? What in the man changed that decided to give us more, to teach us more? And you also said that you're going to teach us some more and deliver some more. So what changed that you decided that maybe the world or your community, which I think I want to include myself in the community, that we were deserving more? So it's not particularly about yesterday and today lecture about the first utilization, but more like a broad question about what changed in you that you deliver us more. That's it. And I'm sorry if I'm
No, that's a great
the question
closing
is too
question.
much.
That's a great closing question, Rick. Great closing question.
And I close my mic.
Well, frankly, obviously, if you've been with me and you understand what my motivation was when I first started teaching, I spent long years doing this without any expectation in return. And and people I came in contact with and what I've done, there's been don't do this, don't do that. And I can teach a lot of things and take you real close to certain things, and you're fine. Nobody will mess with me. But when I get threatened, you better not do this. You better stop talking about that. I just basically say, fuck you, because whether I'm here or not, it's still going to get released. It's still going to get released. So when I have people reach out to me and threaten my family, and I'm not talking about Vinny Minis bullshit, that drama horse shit. I'm not talking about any of that stuff. I'm talking about real people. With real people, real means. And if you don't stop, this is what's going to happen. Have you seen me stop? Am I stopping? So I look at it this way. If I trust God, I ain't got to worry about nobody else. And if God does anything to let anything happen to me, that means he wants me to come home. I'm not fearful. I don't give a shit. So the more they say don't do that, the more I'm going to do it. I know it works. I know how it works. I know where it comes from. These people know it. They're everything. And if you go around in this world, stomping around with insight that the average person doesn't have because they think the markets are free, you think it's buying and selling pressure. And I'm sitting out here proving it every fucking day that it's not that at all. Like I'm at the point where whatever I can do to shove my finger deep as I can up their fucking ass, I'm going to do it. That's why I keep doing it. That's why I keep teaching more. That's why I keep going and taunting them in the live stream. See, you think it's all made up. You think it's storyline. No, it's what you know in this stuff. There is a they, okay? There is a they. And it's not the pronoun motherfuckers who run around purple fucking hair, okay? We're not talking about that. We're not a real entity that doesn't want you knowing these things. So people are going to come out here. It's going to increase. You're going to see more people trying to say some dumb shit about me that ain't even fucking true. Make up some dumb shit. And out here, I'm telling you what these fucking things are telling every individual candlestick, what it should and shouldn't do. You say you're from IT? Listen, anyone that has computer science, information systems, all these types of things, you have to, because of schooling, you have algorithms. To some capacity, you had to study them. And when you break it down as I'm teaching it to you, it's undeniable. It's undeniable. It's absolutely scripted. When it affords them to stop that, it causes a great deal of fear or greed. They're going to do it. We've introduced where they're at. And help me to tell you what these things are going to do real time. And if you don't have this information, the more and more we get into these markets that are highly manipulated, the less advantage you're going to have. By not knowing it, you're gambling. And I can't, in good conscience, sit back and say, well, that was enough for them to learn. That was enough for them to learn. When there's other things that are being shown to me, they're going up 3 tiers to make it difficult. But I got weapons they don't know about. I got shit they don't know about. I got tech they don't know anything about. There's more than just 81 PD arrays for entry. There's more than defense PD arrays. I got shit ain't nobody seen before. And don't be afraid if the market's more complex, because I will share more complex weapons that go against them. Not because it's hard to use, but it'll even the playing field. And even if something does happen and I'm not here, it's still fucking getting released. Period. There's nothing they can fucking do. Nothing they can do. So it's a matter of fuck you. I can't sit at the table. I'm bringing more of me.
And we're
Sorry, Keith. What I'm saying is that, yeah, I'm into IT, and yes, I following your teaching, I know what you being. I'm not gonna say I know, but I have the feeling what you're doing, because doing it in IT, doing it in tech of reverse engineering, you reverse engineering those market. You kind of hacked those market, which is beautiful to see and to be taught like that. It's gradually taught, and you go in layer upon layer upon layer of sorry, my cat here, of understanding this. And there's another thing I want to add. Yes, there is 2.1 million people on the YouTube community. Maybe not all of them they go to deep level of studying, understanding, but a lot of them we are doing it. And so there is a growing community of people that are learning from you, and they understanding this. Like this mentorship, I was discussing that with a friend of mine that we're starting this, and it's already in the billions of dollars of market cap. If you think about all the people that will apply that, well, let's say if 1 million people learn this and can make $1,000 a week, $4,000 a month, multiply per million people, that's in the billions. So yeah, you're delivering something, you're delivering knowledge that it's like a syringe that go on the system and extract, massively distributed. It's like a distributed a knowledge that distribute power among the people to extract from the system, from the network. And yeah, that's dangerous. And well, I hope you're safe. But what you're teaching is amazing. It's fantastic. It's a language. It's like when you're coding and you look at the output of a router or something, and you're looking at the market like at the output of a machine of something, and you keep on looping back into time frame and time cycles to watch this thing printing, and in your brain decoding it and reading it and then anticipating what will be. So amazing what you're teaching. I've been humbled hundreds and hundreds of times in the last year and a half, in the last 6,000 hours studying this. And then I keep on going deeper and deeper. And when you release something new, it's not just a shiny new toy. It's just a deeper level of understanding that language that somehow, well, we know through God, and also there's one time you mentioned that you some people came to you and show you something or invented you something, but then there is the other story where you get it from Almighty. But doesn't matter where you got it from, you're delivering it, and it's a blessing for millions of people, and those millions of people becoming a horde that gonna attack this system, and I don't know, somehow that system may be gonna
It'll fight
reply
back
back.
eventually.
Yeah, maybe it's already happening.
You're seeing the early stages of it now, with the market doing what it does, and still, it's just a way for me to communicate them doing that very thing.
That's I mean, I think Rick makes some really good points just based on your lecture and everything else, Michael. I thought it was really good combo today.
I'm sorry, I'm outside, and I didn't think I got a good signal for a second. I didn't hear what you said, kid.
No, I was just saying I thought Rick made some really good points there, and I thought it was a great way to kind of finish the convo. I thought he was reflecting a lot on what you've added in the live streams.
Yeah.
I mean, this whole fill and what it's all about and what's happening real time, just with, I mean, I've mentioned before, I mean, we say collective consciousness is very real. Market consciousness is very real. And I mean, it's us against the machines, right? It's us against the algos and these signatures and where and how we deploy our decision-making and logic trees. I love how Rick was kind of breaking it down, and it really mirrors a lot of what you have also been reflecting through the live streams.
Sorry, behind that, yes, there is a machine, but behind the machine, I'm not gonna name nothing, but there's an entity, and
That's cool. Rick, can we have Michael close if you don't mind?
yeah, sorry. We continue another
I
time. Sorry,
appreciate
I'm
you.
gonna go.
I appreciate you, buddy.
Yes, thank you.
This is what I want you to really think about. It's a fun question. It's a wonderful, entertaining debate about whether there's an active participation on somebody or something that cannibalizes participation. And obviously, because I got to skate here,
Your
but
network is just break. You're a little garbly, Michael. I'm not sure if you have all of your bars. Just mentioning.
yeah, I have
Okay, well, go figure. But go ahead. I mean, we're wrapping up.
Can you hear me?
Yes, sir.
I think the question whether or not there is a vested interest to go in and do something on the extreme to take people out of the marketplace, to the community listening, I really want you to think about. I mean, obviously, some of you were already subscribed to the idea, but at some point, you got to question these 100 handle, 200 handle, 1 minute candlesticks that come out of the blue, boom, just like that. How can you reconcile that with just buying and selling pressure? Find a way to articulate that. Say you were in a courtroom setting and you had to testify as to how that was happening, and it was the buying and selling influence of traders doing that. Who's stepping in to do that as a buyer or seller? Who's doing it? And why is it failing? Because if that run takes off and it goes 100 handles, 200 handles in 1 minute candle up, then it shits the bed and then goes the other direction. What vested interest would there be other than to unseat individuals that were already participating on the right side of the marketplace? See, it used to happen a little bit, and sometimes the scale at which it would do it would be measured. It would be just enough to knock out the most recent trailed stops. But now we're seeing scorched fucking earth runs that rip through majority of the price run that this unfolded, where there's literally next to no chance at all anyone that's shut a stop loss gets to survive that. So I want you to think about that. I want you to think about that tonight or during the day if you're in the daytime hours in your area. We're getting ready to transition into the evening. But I want you to think about that because we're in an age right now where they're not hiding anything from you anymore. They're literally laughing in your face saying, fuck you, you can't do anything to stop us because it's going to happen regardless. And we're seeing it happen in the market too. So coming to this conclusion and waking up and realizing this is a real thing that's occurring, when you see this happening in the marketplace, you're not joining a cult. You're not joining me. You're not tethering yourself to me. You're waking up to the reality that everything is getting ridiculous. Okay? It's getting ridiculous. And they're flaunting it in your face. They're literally flaunting in your face. And for the people that want to stay asleep and just ignore it and say, no, he doesn't talk about me. He doesn't know what he's talking about. He doesn't know how the markets are really operating, how these markets work. That's funny because I'm out here calling every fucking candle. And I'm even seeing when they step in, when they become active, when they're online. I'm doing it. I'm telling you when it happens. And just look at the fucking thing on your chart. When it's in tweets, you can anchor to your chart. That's Phil. What just took place? A raid. It's going to go the other direction. Oh, that's Phil. Today, you are seeing me explain real time in that candlestick what was showcasing him being a part of that move. That little fluttering around the PD array, the unwillingness to continue, and leaving that level of liquidity that was obvious in everybody's charts. It's relatively smooth, equal lows. Why didn't they go for that? Because I talked about that this morning as a tweet, and everybody wants to see it go there. So they'll drop it, but they'll stop it right before it gets there. That's the next level of this stuff. They're going to do everything they can to try to discredit me. They're going to try to do everything they can to smear my name. Okay? They're going to try to do everything to make you doubt. But I want you to think about what you've seen so far. It's undeniable. Okay? If I never do another fucking thing, you've seen enough to know that this stuff works. I know what the fuck I'm talking about. I know how to fucking trade. And I can see when they're doing what they're doing. That's not possible if it's buying and selling pressure. That's not possible if it's other things that cause these markets to go up and down. So I just want to leave you with that. And Lord willing, I guess we'll be back at it again tomorrow.
See y'all tomorrow, everyone.